Good morning, everybody. It's Chris from Serene Education with the 4 majors analysis update for the 26th of November 2013. Hi guys, hope you have a fantastic weekend and I hope you had a great day trading yesterday. I'm just going to be doing the 4 majors this morning, starting with the euro against the US dollar on our FX8 Ultimate template. And let's crack on. So what have we seen on the daily for euro recently? Well, we've seen a lot of highs, a lot of resistance highs. Recently we had Monday's high yesterday, then Sunday, Friday. You can see back on Wednesday and Tuesday high. So we've got a clear resistance level above price right now on the daily, which happens to be the 50 period moving average as well. The one thing to notice straight away, you look on the hard right edge over here, you can see that my indicator box is very much telling me there's more positive sentiment. There are 1 or 2 areas where the R-squared isn't complementing it, but otherwise we are seeing upside. We are seeing higher swings, which indicates up movement and less lower highs. Lower highs in terms of long term, but you can see near term we do have a current high, and hence the reason why, if we are to see any further buying opportunities for the euro euro against the US dollar, we would need to see this current weekly high that is being posted right now, where price trading right now, it has to be breached. So ideally a nice daily bullish engulfing candle above that level, they would go a long way to pointing us in the right direction in terms of price action. So we have on our daily the blue arrow, blue candles, RMO above, the OSMO indicator above, as well as our RSI at the bottom, which is very, very important. So mostly what I need to do now is to plot a horizontal line above this current resistance level high on my daily, apply a daily close high alert, and just wait patiently. I need to see it, and once I get it, then I'll be able to trade or look for potential trades to the upside. And I have 1 or 2 areas where I could potentially look for near-term targets. One preferably there, roughly around this area here. We had a consolidation, which is roughly, you're looking at about just over 117 pips and change. Get above that, then we can go back towards our all-time high that we saw here back in October, which is roughly around the 157 mark to add to that. So look for a nice confirmed break and close high on the daily. That would then tell us we should be looking for further highs. RSI would still maintain. We are still looking good on all the other time frames. The R-squared should start to complement all that, and then we can trade with confidence to those levels for the remainder of this week. Moving on to sterling, very, very important one this, primarily because we have inflation report hearings this morning at 10 a.m. GMT. Then just to back up even further news announcements, on Wednesday we have the second estimated GDP quarter-on-quarter figures for sterling. So very, very important. We have seen a lot of growth every quarter for sterling for the last year. In fact, August the 24th last year we had a negative 0.7% on the GDP, and this August, a full year later, we are positive 0.7, and this month we are, well, this quarter that we're looking to go into now, they're expecting a 0.8%, so a very, very positive 1.1% increase over the last year, which is fantastic. The government's doing some really, really good things. However, if you look at the actual chart, you'll notice that on the daily we have a number of resistance level highs. We have a high that went back to October, we have another higher through the last period of October, and we had another consolidation high yesterday with a bearish engulfing candle closing low after the indecision on Sunday evening as we headed into this major resistance level high here recently. So very, very important. Will inflation reports, will the GDP figures over the next couple of days give us our likely indication? But it would have to do both. We would either have to have really negative figures for both inflation and GDP to really see a pullback on sterling, and if we do see a pullback on sterling, then we know exactly where price is likely to fall to. We'd like to go back towards the 23.6 level here on average, and that is roughly 252 pips and change. So if we get a bearish engulfing daily here to confirm that, we probably have about 150 pips of that to trade. So very, very important. If the GDP figure comes out on tomorrow, in fact, which is really, really negative, that's really going to pull price to the downside. However, if we do see favorable outcomes for both, we could see that news actually break this major support and resistance level high. And once we do that, then the next level is a monthly fib level, which is quite close to where we are, quite close to the actual weekly fib, which is 175 pips, but we could see a very aggressive trade to that level. We could likely see a nice pullback, and then a nice support level being found above a prior resistance level here on the daily, and then a kick on to our next monthly high, which is a favorable just under 1,000 pips to the upside. So very, very important for sterling this week in terms of any further progression for this particular pair. We have had 3 noticeable failures at this current level at the 1626.50 and change. So in order for us to see any further highs, we would need to see the current daily resistance level high being breached. Once we get that, then we could trade with a lot more confidence to the upside. So wait for the news to really give us that indication. It's far better to give a couple days back to the market to get a genuine trend direction. That's what we want to see, a genuine sentiment move from the market, and then we can trade the outcome. US dollar Swiss franc here, euro moving lower or blue, and the Swiss franc euro US dollar or blue moving higher. Apologies. US dollar Swiss franc is moving lower with sentiment. Okay, you can see that price has been back to the same level yet again. We had one over here, we traded into the institution support, one over there, we had a breakout with no true sentiment, and you can see the daily candle, this is the 4-hour candle, apologies, 4-hour candle testing the same level, the same institution moving average on this time frame. So very, very important. We've got to see price breaking with true sentiment, ideally below this, and then we could target the downside. We can look towards these levels to the downside here, particularly the weekly, the 38.2 level on our weekly fib level, which is a healthy, we're looking at roughly 223 pips and change. So there's more than enough in that to see further a great return on time invested. So here you can quite clearly see we should be looking for negative sentiment. If you look at the actual 4-hour candle, we have our last arrow was a 4-hour, on the actual 4-hour was a blue arrow, which doesn't go really well with what we're requiring. The candlesticks are red, RMO is below, and the Osimo indicator is still above the 0 line. The RSI is below, which is good. So we don't have a lot of confirmation on our 4-hour, and that's the linear regression. And also our Osimo indicator was the MACD impression. So we've got to see a bearish engulfing counter close lower than the current institution moving average, and it's got to be a very nice bearish engulfing candle with a lot of sentiment behind it, and that will be a nice directional candle. In fact, we'd obviously see the Osimo indicator drop below that if it's true sentiment, and then the R squared over here on the 4-hour would go blue to definitely confirm that sentiment. RSI would just need to remain below, and the RMO is already below. So fantastic. So here, patience is a virtue. Wait for a confirmed break below this current level over here. So apply trendline alerts to this level here. Wait for the 4-hour candle to close lower. If we do get that, we'll see the red arrow coming up. The candlestick's already red. RMO is already below. This would cross over to the negative side or to the dark side. RSI is already on the dark side, and that will then allow us to trade confidently to the downside. At the moment now, you can see that on this particular time frame, we have a bit of hit and miss. We've just got to be patient and wait for that confirmation. On to the last pair of the day, US dollar Japanese yen, the daily. We've seen a lot of movement after we've seen a break of that wedge. I referred to you guys that we needed to see a nice confirmation break of the wedge. Have been doing so for a number of weeks now. We have got it, and you should be trading this high. It's now making new highs every single day, which is fantastic. It is trading into the prior consolidation high right now, which we saw back in June of this year. Get above that, it's a lot cleaner air. Okay, we're looking in excess of 200 pips to the next on the major high that we saw back in April of this year. So here, if you're looking to trade, we are seeing a lot of indecision on our intraday time frames, but the long-term sentiment still favors the upside. So here, all you got to do is be patient. You'll notice that on the prior 3 days, a lot of indecision, and yesterday's candle is looking very, very shooting star-like, very exhaustion-like. The only thing that's going to cancel out that exhaustion candle is a bullish engulfing candle. We are trading at a prior support and resistance level high. You can see the Osimo indicator has dropped. The RSI is still making higher highs, which is important, and the RMOs also. So we have blue arrow, blue candles, all the moving average below price, RMOs above, the consolidative, and the RSI is above. But you can see there's a lot of indecision on our intraday time frames. This daily candle yesterday, even though we were moving high, let me just zoom in, you can see that there was more selling contracts happening, more selling bias on this than there was purchasing. You can see indecision, a lot of resistance levels here. So ideally, a daily candle close higher and bullish would go a long way to confirming to me that price is still wanting to go higher, and then I can look comfortably to taking profits at the next level, which will be roughly around the 103.75.50 and change. I'm not going to second guess here because a lot of indecision on yesterday's candle, and it has been over the past 3 days. I don't want to speculate. I want confirmation. Okay, so if we see price making high highs and we get a nice bullish engulfing candle on the daily, all this intraday will then, we should see confirmation blue and the R squared complementing it. But if we don't, then this is, and we see a bearish engulfing, then this is a clear classical shooting star formation, resistance level shooting star, exhaustion candle, and then we should see price reverting to the downside. And then reverting back to the downside, we could see the trend being targeted, okay, which will take us back to the prior breakout support and resistance level here at 134 and change, but back towards our monthly fib here at 99.78 long term. So be patient and wait for a defined confirmation candle for the US dollar Japanese yen. Okay guys, that's it, short and sweet, to the point. Please back it up with sound money management rules, very, very important, and keep it as simple as possible. Let the indicator, the actual strategy, do the work for you. All you need to do is confirm it with the indicator box down the bottom here. If you do get confirmation and you do get all your candlesticks, etc., and your money management is in your favor, then all you do is you enter, stop, target, and leave it alone, and then move on. That's got to be very, very mechanical in your approach. I'm going to leave you with that. Please be aware of the news today, in particular the inflation report for sterling, very, very important. We also have a lot of news out this afternoon for the US market in terms of building permits. Very, very important. Building permits out at 1:30 GMT this afternoon. Please be aware of these news announcements. We also have the consumer confidence figures for the US market this afternoon at 3 p.m. GMT, also very, very important. And then later, anybody trading the Asian session, New Zealand dollar, we've got trade balance figures for this, and it's looking quite dire. So if it comes out as they expected, which is almost double what the previous figure is, then you should be looking for shorting opportunities on the New Zealand dollar. So take that into consideration. Other than that, hope you have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.